One thing that I've been processing a little bit is this idea of asking gotcha questions. Mm-hmm. And as someone who is on cable news frequently, I thought you would have some opinions on this, but this comes from listening to Tucker Carlson on various like mainstream media outlets. Mm-hmm. And then also recently listening to JD Vance on Rogan. And what I've noticed is there's a tendency among some mainstream people, when you get a controversial figure on the show, to try to corner them with just a gotcha question. Like, and there's this feeling, I think it's almost like picking a scab, that I'm going to just throw a punch at you. It's going to connect. And then I'm going to look really smart and score points. And that's not to say that people shouldn't ask hard questions. But what I've seen in so much of this is it's, to continue the fighting metaphor, it's like watching someone step into the ring with a boxer who sees all of the moves coming from a mile away and they don't know how to handle it. So when I'm watching this with Carlson, the way that it ends up working is, people will say like, many people believe this about you. How would you respond? Mm-hmm. They'll do name calling. Like, I think you're an anti-Semite. You're a racist. And there was one point where he mentions that Epstein was murdered, and the journalist was like, "Oh, how are you so sure about that?" And he has evidence on evidence on evidence. And one of the things that I've been thinking about that is he actually has some economic ideas that I wish mainstream media would press him on specifically. And with Carlson, like, there's things I agree with him on, there's things I disagree with him on. But he said this on his show, and I hope among all of these hour-long interviews he's doing, someone asks him about this take, which is, quote, "I think people should stop paying their credit cards. I know no one else agrees with me, and you have a moral obligation." Really? Well, you have a moral obligation to not send credit card applications to kids in college, so this goes both ways. It's like blaming the drug addict and never mentioning the dealer. Someone's selling fentanyl, and that person is on the hook too. So that's how I feel. So is it a sin to rip off your drug dealer? Which gets to an insane place. And Malcolm, the reason I'm bringing it up, it's something you can laugh off. This guy has, at times, the number one news podcast in America, one of the top news shows in America among all like traditional and new media. Mm-hmm. Someone's probably going to listen to this and just go, "Yeah, Carlson told me I don't have to pay my credit card." Like that could be incredibly damaging to susceptible people.
If he said that about student loans, would you feel differently?
Are the student loans we're talking? Are the student loans we're talking about federal loans? Are they federal loans that? Okay, well, actually, are they federal loans or private loans?
Who cares?
Because federal loans, aren't you in payment pause? Like, isn't that still going on where there is a pause in terms of interest building up on student loans?
I think it's going away in 2 seconds, though.
Okay, but that's different. Is if you're telling people to pause paying something where there is an interest pause versus something with a 30% APR, there's no difference?
Well, no. The interest pause has nothing to do with the premise of my question. I'm saying, let's say that there is no interest pause, there is no student loan forgiveness in the system, and nobody's coming to save you, but you have an entire generation or a generation and a half of people who are very disenchanted with the financial system, the government, and everything else because this albatross is still hanging around their necks from choosing to go to better themselves. And you have someone like Tucker Carlson, who I will refer to as an anti-hero in this scenario, who's championing the idea of, hey, everybody, however many millions of you there are who have federal student loans, let's say, just to help sweeten the pot for you. What if we all decided not to pay those loans at the same time and we just see what happens? Let's opt out. Let's resist and unsubscribe.
This is the resist and unsubscribe movement.
What say you then?
If it's actually so the premise of your question is that it's actually organized.
No, he said it once on his podcast. He noticed that it's trending well online, and so he went and said it again. And then it got more traction, and he said it again. And then people started having him on legitimate TV programs to interview him about this idea and this concept. And so he said it a whole bunch more. And so now it's been amplified all over the place. And 2 months in, there's a resist and unsubscribe from your student loans movement. Do you agree with the premise then?
No, because I think it's a gamble that no one's going to back you on. You're playing with stakes that you may not be able to handle. There are moves that you need to push for before then, such as, should people have their Social Security checks garnished because they still own student loans? The idea of telling anyone to not pay a federal loan is pretty much always a bad idea. So I would worry about the consequences of being wrong within that movement, especially if you can't handle the payments.
So I don't have a strong opinion on this hypothetical that I just cooked up anyway, but as I'm going through this and kind of pulling on the thread, one thing I'm thinking is that could be a thing that gets the attention of the people who have the ability to make a change. Because legitimately, even a third of the people who have outstanding federal loans do. Not paying those loans could buckle the system. And you already have an administration that's hostile to the Department of Education that's doing everything they can to get rid of it. And so those two things together mixed up in a stew could have a Republican-led Congress, at least for now, that is championing this idea of we're just going to cancel the whole thing and start everybody from scratch because that's what's going to get us all reelected in 4 months.
What you're describing may happen naturally because after the pause, who says everyone's going to start paying their loans again?
They are. People are rule followers, naturally.
You think they will?
Yeah.
You don't think a third of people are going to go, I haven't paid this for 2 or 3 years now. This is the equivalent to half my rent payment. I can't afford this. See you later.
I do not. I think you're talking maybe 5%.
Okay. So we can argue over semantics. My whole point with this, though, that I want to go back to the gotcha question. And we do have economic things to get into with the show that I've realized is sometimes a gotcha question can work if you overwhelm someone with evidence or claims. Something we have a newscaster in Colorado named Kyle Clark. Many of his clips go viral when he does these like debates for both Democrats and Republicans because it's just like a machine gun of clarity and facts of just like, do you believe this, and then the person is frozen, and it's all usually like it's legitimate. He's a good journalist, but often
does that matter though when you're talking to the villain in the story? And I'm not talking about any of the local politicians in Colorado. I've never heard of them. I'm talking again about like a Tucker Carlson, someone who has seemingly very intentionally made himself into a TV villain because that's what his brand is and has been selling for 20 years. And for somebody like that, when I sit down for an interview with you and I know you are a unfriendly politician or unfriendly journalist on the other side, am I really worried about your gotcha question? Like, I already know what you think of me. I know what your audience thinks of me. I have nothing to lose here. Like, so you're not lining up to fight, a boxer who already knows where all of the punches are coming from. You're lining up against Mike Tyson, who blocks your punches with his forehead on purpose. Like, it doesn't really matter to him.
I see where you're going. I think for anyone who is in media, there's an element of ego. They want to look good. They want to connect with their audience. Like, I think for many people, they don't, I'm doing the same tactic. Myself in media, I just can speak from personal experience. I wouldn't want to feel that way. And I think most people wouldn't want to feel that way. You want to win people over to your side in your argument. So I think when you get to that level, especially, that doesn't mean your ego goes away completely. You like getting attention and you want people to be on your side. The point I'm getting to with the gotcha question that I have noticed is I was listening to Vance on Rogan, and there's a couple of times where you're like, oh, the vice president got. And it's not because Rogan is like interrupting him a lot or like trying to like pull one over and really trick him. The gotcha comes from asking a hard question that you want to know sincerely and then shutting up. So what I like for all of the ones I saw with Carlson, there's one exception where New York Times journalist Lulu Garcia Navarro basically says, you called Trump the Antichrist. And he goes, no, I didn't. And then they play a clip of him saying that or asking if it's true in a way where he may believe that. With Rogan, he's on with JD Vance, and his question is basically like it's I think over an hour. It's not close to the front of the interview. He starts with some areas of common ground. He gets to disagreement, and then he leaves on common ground. In my view, it was a pretty masterful interview, even though it's controversial. And he basically asks, like, dude, what's going on with Iran? Like, it seems like you have the president saying there's a deal that's been reached, negotiations are successful, then it just suddenly all falls apart and we start bombing them again. And Vance goes, oh, yeah. So how long do we have here? And Rogan, because he owns the medium, he doesn't have to cut away to commercial break. He just goes, it's as much time as you need. And then he just lays off. And ultimately, if you want to get an answer to that, if you want to see someone comfortable, it doesn't come from like a constant spar. It's from giving someone sometimes all of the time they need.
Mm-hmm. Well, especially when you have someone who is a habitual liar and is even perfectly comfortable lying on the record. And then, but again, to my point, is it really a gotcha when we all know what that person is about anyway? And we all know sort of what their MO is in interview situations that call for truthiness.
Sure. And where was I going to leave it? And then you catch things as a listener or a viewer. I think something that happens in traditional media is that sometimes the broadcaster, and I've felt this myself, I've wanted to ask gotcha questions. I think I have asked a few. You want to spell it out to the audience. You want to say, like, this is exactly why this person, I'm going to give you all of the facts. And then with a lot of this traditional media, and in the case of Rogan, he's like, it's up to the audience to figure it out. And I give them credit for being intelligent. So one thing you may notice if you listen to that interview is he asks Vance about aliens, like what he has seen now that he is at the highest levels of government that we know about aliens. And he's like, man, I'm so curious about it. I haven't had the time to look into it. And for Rogan, he's like, oh, that's something that I personally would look into. And then me as the listener, I'm like, dude, you're on a book tour right now. You had time to write a book. You had time to write a book, negotiate the Iran war, and go on a book tour to promote your book as a sitting vice president, but you couldn't make one phone call to see if aliens exist. That's what you're trying to explain to me right now. I don't believe you. And then when you go on to say, well, as soon as I know something, I would just tell everyone, that makes me believe you even less. Okay. That's the end of my rant. You want to do the show? We got a lot of market stuff today. Netflix disappointed investors, but maybe not Malcolm. He picked up something that he thinks will help prepare for the chip apocalypse. And then we got some listener questions. Let's get into it. Malcolm, Netflix, a company that you have recently been positive about, just reported last week, and they disappointed investors apparently because of guidance. On the surface, it looked like their earnings were okay. They met their earnings per share. Revenue looked all right, or revenue was down a little bit, and that really disappointed the street. But why do you still think Netflix is a opportunity that you want to talk about in a long form way? You have all the time you need.
That feels like a gotcha question. So the big thing to me, from what I can see about Netflix, is, like you mentioned, there's no new news in the latest earnings. They basically met expectations exactly where they were. Not enough to really send the stock tumbling. It looks like it's going to open down another 12% or something today. However, the one key detail that I think analysts did not love is the idea that, hey guys, we're going to stop telling you about our engagement numbers now. So last year, they, in one of their earnings releases, said we're going to stop telling you about our paid subscriber numbers. That's no longer your business. That's our business. And the market didn't like that. And now they're saying, we know you really want to know about our daily engagement, but we're going to stop telling you about it and, do with it what you will. And I think this is creating an opportunity to be getting into the stock at its, I don't want to say lowest moment, but at a moment of weakness. And so my own personal preference for where I like to buy long-term stocks, not necessarily something that I'm in as a trade and want to see what happens, but a long-term stock that I intend to be a part of my portfolio for a decade. I want to get into that stock when they're having a temporary moment of weakness, but they are a strong company long term. And Netflix to me is exactly that, because this company has basically become a utility where you're not going to cut it out of your life unless a lot of other things have gone wrong. Like, think about what it would take for you to no longer have the lights or the gas or the water on in your place of residence. That's essentially what I'm equating this company to, because it's really that deeply ingrained. But then when you look underneath the surface, this company has had 2 price increases in the last 24 months. And instead of membership going down or viewership or subscribership going down, they increased paid subscribers by 40 to 50 million users. Then they're turning on their advertising engine to the point where they did twice as much ad revenue in year 2 of turning on ads as they did in year 1. And they've added now about 4,000 advertising clients in just those 2 years, which is pretty remarkable. So all that to say, I think that there is a ton of opportunity here. The company is definitely at a point of weakness. It's on its back foot. But I think that I don't know that it'll be the next quarter where they're able to start to turn things around and tell a more compelling story. I think, though, they're just one hit away. I think the next K-pop Demon Hunters, Squid Game, Stranger Things phenomenon that hits this company sends the shares running in the right direction, and we have no idea when that is. So I broke with my usual trading discipline where I will average into a stock on its way down. I started buying at 81. And my normal plan is every 10% pullback, I'll just keep adding shares and see what happens. I was curious if the stock would sell off following earnings, and so I held off as it's been trading down from where I first started buying it. And now that it has completely sold off, I just went ahead and bought the entire position. So it's fallen presumably to about 65 when the market opens. And so that to me is enough of a slide that I'm willing to just go ahead and pull the trigger on the whole thing.
It's something I've seen before with Netflix, where it is a utility that trades like a cyclical. And by that, I mean that it is something that people are not going to cancel within their houses, but it is something that it's a heavily narrative-based company. And there was a moment, I think it was it 2023, when they lost like some subscribers, and you were seeing the headlines of "This is the end of Netflix," and then a few years later, the reason I sold out of my position then was I was seeing too many things about how Netflix is totally undefeated and nothing bad can ever happen to them ever. And now we're back to the former, which is like, oh, I don't know about this company's long-term future. And part of that was because of the Warner Brothers buyout offer, right? But I take your point. I've picked up some shares of Netflix again after we have had some discussions, and I think you make a compelling case. The other one you picked up that you want to talk about is Cerebras.
Yeah, so Cerebras, CBRS, is a very newly IPO'd stock. So do with that what you will. It's not a 10-year-old, been doing this for a long time and feel really good about the narrative behind it. But I started buying it because it fell back to its original IPO price. So it went on this round trip over the course of, I don't know, less than 2 months, I think, since it IPO'd, where it went from 175 to close to 300, if memory serves, or maybe just over 300 at one point. And basically what Cerebras does, for the uninitiated, is the opposite of traditional semiconductor manufacturing. So normally semiconductor manufacturers, following Moore's law and philosophy, are trying to shrink the number of transistors on one microchip so that you can get way more compute onto a tinier device. And what Cerebras has chosen to do is say, forget breaking up that one wafer into several chips. So normally a microchip is about the size of a fraction of one of your fingernails, right? So we're talking about a very tiny piece of material going into a pretty large device. Instead, Cerebras is saying, I want to take a wafer, which is the size of like a laptop or a dinner plate, and put as many transistors as I can onto that one gigantic piece. And what that does is allow for a lot less latency, a lot less switching of information between the different chips in the unit. And that is going to help make a much more powerful compute experience than what you have in, say, a GPU cluster where you've got 72 GPUs in a Vera Rubin rack. And that is where the information is bouncing between for a person running a query. And right now, Cerebras is number one customer by a long shot. I think 90% of their revenue is attributable to OpenAI. So that's why I'm saying this is a flyer. We want to make sure that we're approaching this with the opposite of what I just said about Netflix and it being a forever stock. But there is the potential that before that contract with OpenAI runs out at the end of 2027, Cerebras could pick up another one or two significant customers because what they're doing is so different from all the other companies that are going after solving the compute problem. If they can, that's what's going to set this stock on fire. And so it's one, again, that I set my high water mark at 175, started buying my initial allocation there. And as it has pullbacks, as the market continues to pull back, especially with the PHLX or the stocks selling off, it's part of that sell-off right now. Every time we get a 10% pullback, I'll just average into it on the way down. But I think it's one that is worth investing and then investigate rather than kind of sit and watch and hope to catch the falling knife completely.
I can't believe you're going after a OpenAI supplier, someone whose business is based on OpenAI spending commitments, which you've dragged a lot on this show over the past few episodes. Maybe things are really changing for you.
How crazy that sounds, or how, I'll just say that, how crazy that must sound to anyone who knows me as an investor. But what I'm thinking about is the market has been behaving as if the existing AI phenomenon is not disruptable. Like the disruption itself that we've been experiencing can and will be disrupted by someone else doing something else. And one of the ways that I think that a company can be less compute constrained is to be better at the way that it handles the compute that it already has. And so if there is a company that is making a much more efficient chipset, then that might actually mean that, for analysts and investors who are skeptical of NVIDIA's ability to continue to grow their margins any better than they already have, or they're skeptical of NVIDIA's customers being willing to pay up because NVIDIA just announced another price increase. And, at some point, you got to look around and go, who the heck can afford this at this point? It might mean something positive for a company like Cerebras that is trying to go in a little bit different direction.
I'll give you my latest pickup. I was going to do this later in the show, but I think it makes more sense here. My latest pickup is VICI Properties.
Uh-huh.
And this was based on a convo we've had on the show a few times, I think, which is you want to find somewhere to hide. And I like the idea of real estate, which I think is having a comeback already. If you're looking at some of the ones we've discussed on the show, like Cousins Properties, for example, the Class A office real estate platform, and Prologis as well. I think there's people who are looking more for that like real asset, somewhat safe idea. And VICI Properties is basically the landlord of the Las Vegas Strip. Most of its tenants are Caesars and MGM.
Mm-hmm.
It's near a 5-year low right now. If you look at the chart, and we're not chartists necessarily, it trades within a pretty tight range. And it's near a 5-year low, pays about a 6.77-ish% dividend. So let's just say between a 6 and 7% dividend. And there are a lot of concerns about softness in Las Vegas. That's true. Attendance is down a little bit, but gaming revenue is at record levels. That's the K-shaped economy in action. This company signs triple net leases with its tenants like Caesars and MGM. So that means that they're not paying for the operating functions. It means you get less money because you're not putting in necessarily those like capital improvements. You're letting your tenant take care of the property more than you are. I thought this quote from the CEO, Ed Ed Patonik was interesting, saying, quote, at VICI's business model, our revenue and income streams as a net lease REIT are generally not highly subject to material cyclical fluctuation, end quote. Basically saying we cash checks from these big casinos. So I think there's a little bit of a narrative problem, but ultimately this is a company that owns a highly desirable property that you and I have no chance of buying land in. People will go to Las Vegas. I can't find evidence that Caesars and MGM are in danger of not paying their rent checks. They are not going to follow Tucker Carlson and Malcolm Etheridge's student loan advice of just not paying it and seeing what happens. And I think it's a place with a little bit of income, chance for capital appreciation, and completely disconnected from the AI trade we've been talking about.
So can we look at, we've talked about 2 buys. Can we look at a sell?
Is that PayPal?
No, I haven't owned PayPal for a very long time, and now I'm glad that I didn't hang in there because
I'm ready to sell PayPal.
Oh, you should have sold a while ago.
I'm aware. Thank you for that. Thank you for that hindsight.
Yeah. Man. Not to rub salt in the wound, but geez.
This episode is sponsored by Capital Area Planning Group. Capital Area Planning Group is a fiduciary wealth management firm that specializes in helping high net worth individuals and families navigate the complexities that come along with managing concentrated stock options, multiple income streams, and an ever-changing tax code. While our team of certified financial planners are well-versed in all things personal finance, our areas of expertise include equity compensation, estate planning, and multi-year tax planning. At Capital Area Planning Group, we believe in pricing transparency. That's why our fees are posted on our website, right alongside the various services we perform on behalf of our clients throughout the year. If you're tired of receiving the same cookie-cutter advice from your financial advisor, then don't wait. Reach out to us today at capgllc.com to experience a better approach to wealth management. Again, that web address is www.capgllc.com.
I think that what's happening in the market is that crazy, and we have to prepare ourselves for when the storm finally does come. And I think that there's been a few canaries in the coal mine. We had Uber and Tesla and Microsoft and others publicly saying earlier this year that Anthropic's Claude Code tokens just cost too much. And it's blowing our budgets so badly that we've had to tell employees internally either don't use it anymore at all, or in Tesla's case, I think they put everybody on a $200 a week token allowance.
No more token maxing.
And I don't even know how long that lasts you, but I know it's not very long. So, those are the kinds of things, the messaging that we got in initially that said things aren't okay here. Then we get, XAI before it merges into SpaceX, and then Meta saying basically we overbuilt for our own purposes. We thought that we were going to have so much demand because we had these ambitious projects, and now we recognize that we don't have as much demand as we thought. And so we're going to turn that around and try and lease that to the highest bidder. And in XAI's case, they were very fortunate that Anthropic needed that additional compute, and so they were willing to lease that from them for like $1 billion a month or whatever it turns out to be. In Meta's case, they've wafered on this a little bit since the announcement came out, but basically saying the same thing. We overbuilt, and the way that they phrased it, I think, I want to be as close to accurate as I can. They phrased it something like, we may be in danger of overbuilding, and if we decide that we are, we know that we would have the ability to open it up to lease it to someone else should they need the excess capacity, should we have the excess capacity, but we'll let you know. Like, nice. You don't say things like that if you don't already know that your projections were way off and you're in danger of running into some trouble. So anyway, like, those two things to me are two canaries in the coal mine that have shown up dead now and are saying, everybody get the heck out of here. Then you have IBM that just pre-released their earnings, which they knew were going to be terrible. And so they wanted to get ahead of it. From what I've read, the board had this very strong debate over whether it made sense to just wait a week or so, let it come out when it was supposed to, or just go ahead and release now, take our medicine and hopefully the street will reward us for our candor. And I do appreciate Arvind Krishna, the CEO's willingness to be candid and just raise a hand and say, hey guys, it's not looking good over here. But the rationale that they are giving for why the quarter doesn't look good, and also their forward guidance doesn't look so great, is that the cost of everything AI is up so substantially that there isn't a whole lot of margin left in everyone's tech budget to pay IBM for the services that it offers. And so in this case, their AI book of business is consulting large scale organizations on how to develop an AI implementation plan and then implement the plan with and for them. They had built a pretty significant, multi-billion-dollar consulting book in the last couple of years out of nothing. Like, they didn't have that as a service, more than a couple of years ago. And so I was very impressed with it and wanted to own shares of the company because that was a very smart play. The only other company, similarly situated doing it at scale was Accenture. And so anyway, their rationale is our revenues are down and will continue to be down substantially because the price of memory is up, the price of networking is up, the price of construction is up, and all these things that have blown companies' budgets out of the water means that because we're a 6, 7, 8 on the totem pole, by the time they get down to paying the consultants, there's just not a lot left for us. Also, the cost of cybersecurity and the need for cybersecurity has gone up. And there's dollars flowing over there that, again, are not coming over to us. And so you saw immediately cyber stocks popped and IBM stocks sold off by like 25% or something by the close of the day. And then tried to get up off the mat the following day and couldn't quite do it. I think it closed flat. And now we're looking at IBM and saying, when is Big Blue going to be back? But I think that is the third canary in this coal mine, where a company that's right in the center of the AI revolution and had been, reaching all-time highs all over again, like what's old was new again, suddenly is out of vogue just that fast, simply because the costs for everything AI related have gotten so out of control that you just can't afford to do it all. And so a lot of the companies and a lot of the things that have been happening outside of the chips are probably going to start faltering the same way.
Outside of even the chips are getting hit though.
Yeah,
you're starting to see a huge sell-off in a lot of the chip companies right now.
But so also, all right, we're in it, so I'm going to go even further. What, from just preliminary conversation I've had with people who are in positions to have a reason to know, like senior leaders at some of these publicly traded hyperscalers, what we're also seeing, so I'm old enough to remember when companies used to store their data in these large closets or basements of the office building, within like racks and racks of servers that constantly overheat and hum really loud. And you got to use these large 6-foot fans in the doorways to like help cool them off and all that, right? And then Microsoft and Salesforce and other companies came along in the early 2000s and convinced us that like, you don't need to do all that. You can just store all your information in this cloud, and that's the way to go. And so the company ends up with less downtime. They can use their data a lot more fluidly. And oh, by the way, it helps people work from literally anywhere. So distributed workforces can now happen. And now as we're moving to inference rather than training, right? So we actually need to interact with the models inside of our organizations rather than where they needed these gigantic data centers to actually train the models. Like, for instance, GPT-2, from what I heard, cost about $50,000 to build. The frontier models being created today are like $2 and $3 billions of dollars to train. And so if you think about all the different companies out there trying to train these frontier models now, that's what the cost is. And that's what those data centers are being used for. Meanwhile, a company like Walmart or Dick's Sporting Goods or whoever else that has their own data, has their own data set and their usage case for it, they actually have their own models that they're running that are running inference and doing the thinking and the doing and the working. And what we're seeing now is companies are actually building that on their own campuses or in their own buildings, because the closer the people using the data are to the data, the faster the agents can actually run and return to you the work that they're supposed to be doing. And so what that's meaning is people are cutting out that middleman, building their own servers, building their own data centers, if you will, inside of their own units. And that's causing them to need to spend money on, servers, racks, networking equipment from Cisco, like all those kinds of things. But again, that means there's not a lot of money left over for the consultants and the other additional things that you would spend that money on.
And so you think that ends up hitting the big tech companies too, like Amazon Web Services, Meta, these huge companies with big data centers where they're selling out compute space to the smaller companies you described?
So I think they are the last. I think the three public cloud companies that you're talking about are the last dominoes to fall if they do, because they have so much optionality. Like if I'm Microsoft, I've got Azure for my own internal purposes, whatever projects we want to run and do ourselves. And then we've also got Azure for leasing out that space to our clients who pay us more than we would pay ourselves to use that same space. And so I think in the case of those three you mentioned, they're probably in a much better position than everybody else. But then there's a lot of everybody else, right? Think about all the neo clouds that have sprung up in the last 5 years that said, forget Bitcoin mining, because that's not really where the move is anymore. I'm going to go over here and use these servers for GPU rental. And if that no longer is a need, because NVIDIA loses the ability to sell its next GPU to its next customer because it can't prop up everybody at the same time, those are the companies that bring the whole thing down. I don't know that Microsoft, Amazon, and Google are nearly as negatively impacted.
Your CoreWeaves and Nebuses, some of the speculative stuff. Okay. And I think all of that gets to, actually, this does go back to Las Vegas, because what you're saying is you think there are canaries in the coal mine. They're gonna start chirping louder. People are gonna be looking for places to hide, and so it makes sense to look at those the real assets that people have to go to and can't easily replace. Okay, yeah, I buy it. Something we've been talking about on the show a lot. I've got a real economy topic that I want to do as well, which is, we've talked about the K part of the K-shaped economy. This is the rest of the K, under the tips of the K. It's from CNBC. Grocery units, which refer to individual items, fell almost 2% in June from a year earlier. People are literally cutting the number of groceries that they buy. Groceries cost about 33% more than in 2029, 4% annualized inflation over the past 7 years. And I think what's interesting is how two companies are responding to this. So you have PepsiCo CEO Ramon Laguarta saying, basically, the consumer's in worse shape than we anticipated, and it's driven mainly by gas prices. And on the company's conference call with investors, so people are buying fewer bags of chips in Pepsi. Then you look at Costco, which says, okay, so at the same time where people are buying fewer groceries, you have the PepsiCo CEO saying it's because of gas prices. Same store sales are rocking at Costco, and it's because of gas prices, because more people are now going to Costco because they know they can get cheaper gas there. And also, even though you're spending hundreds and hundreds of dollars at Costco, you know that you're getting a decent deal. And so this is the other part of the K-shaped economy, where people at the top of the K really like Costco because they're getting a good value. And then people on the lower part of the K really like Costco because it's where you can actually get groceries that aren't at crazy expensive levels. The results of that from their latest sales numbers over the past 44 weeks, U.S. same-store sales are up 6.7% at Costco, which for a grocery store, I think is pretty remarkable.
I took a course in college called consumer behavior. And I remember being like, I don't know if skeptical is the word, but maybe like in slight disbelief that like 2 cents in discount in something in the front of the store was enough to make people walk all the way through the store to the back of the store to buy the milk. And this is one of those things where because your sign is posted at the Costco gas station that says that you are 10 cents cheaper than the Exxon at the other end of the block, people will come to buy gas. And then because I have to sit in this line for 10 minutes to get to the pump, I remember all the things that I wanted to buy from the grocery store. And I say, well, I'm already here. I might as well pull into the parking lot and go spend $400 on groceries because I wanted to save 10 cents per gallon on a car that maybe holds 12 or 15 gallons of gas. So you do the math. $1.50 of savings made me go spend $400 that I was going to maybe spend $50 at my real grocery store. Like, it's amazing to me that that is the thing that makes the difference. Like, it makes us feel like we're getting over on the system. And in reality, we end up spending a tremendous amount more than we actually do. But like, this is that in practice.
Why do you hate Costco? Every time I bring up Costco, you're like, it's just too expensive. People get too much stuff there. I don't like it.
I don't hate Costco as a business model. I actually love Costco as a business model. I think it's genius. I hate Costco as a consumer who has to physically be in a Costco. Like, I go buy Costco gas at 7:00 in the morning when I can just pull up to the pump and go on about my day, because I do not want to wait in that line for 10 or 15 minutes for a pump just to save $1.50. Like, that pisses me off that people are like, the line is all the way zigzagging up to 100 yards away for people who are here to save 10 cents a gallon. I also hate that the parking lot feels like I'm at a football stadium every time I go into a Costco store. The whole concept just makes my skin itch. I do like the Costco pizzas, right? But the fact that I have to go so deep into the store and elbow all these grandmas to get there, I just feel like I'd rather order Domino's.
So you're a member.
Mm-hmm.
You're a member?
Yeah.
I didn't realize that. I thought you had totally written off Costco because of how much you hate it. But
no,
it turns
this is an informed opinion. This is informed hate.
You're like a closeted Costco member over here that you don't want to admit that you go to Costco sometimes because you have to elbow old ladies.
My wife has a Costco membership and I am her +1.
Okay.
So my wife will go to Costco, gladly wait in line, gladly elbow the grannies, gladly eat all the samples, will gladly do all that stuff to save that 10 cents per gallon. Like,
I have a much more civilized experience at Costco, I think, because I'm okay parking a little far away. First of all, I think we need to reset your expectations.
No, don't make me walk.
You have to walk a little bit. You can't find the spot that's just like close to the store. You can park away a little bit. You'll be okay, I promise. And then also, it's still better than when I go to King Soopers or Kroger, sometimes the Mad Max situation that encounters me when I go into the regular grocery stores, where the proteins aren't that good. You have to really check the produce. And I go to Costco, I have much more trust there.
So that is also what's amazing to me about Costco. I will give them credit there. You're talking about the lowest cost option to fill your grocery cart. It also feels like you're getting better quality produce than any grocery store that I've been to.
Except Whole Foods. Anyway, one more thing on this.
Including Whole Foods.
You're wrong. One more thing on this. Just you have to know what you're picking. It's okay. 50% more volume on saunas and massage chairs at Costco. The sauna boom that we talked about, tons of people are buying saunas at Costco. And I actually like that when they just drop those like random things in a Costco earnings call where they're like, things are good. The war in Iran means more people are coming into the store. Things are pretty boring here because it's Costco. 50% more volume on saunas and massage chairs.
We bought a
saunas
love
are
sack.
back.
We bought a love sack because of Costco. I don't know if you've seen the modular couch setup with the person with the clipboard that's trying to make eye contact with you to sell you the couch. But
I've not seen this.
Yeah, no, I am actually guilty of buying a gigantic couch system thanks to Costco.
Huh. Congratulations. My complaint with them, and then we will move to this listener question, is the amount of like outside salespeople that are in there. Where it's like, I don't want new gutters. I don't want to change my phone plan. Like, I don't mind pushing through to the back, but it just, sometimes when I'm in such a classy and wonderful place, and then there's that showcase showdown type of approach of like, hey, do you want to fix your windows right now as you check out with your receipt? Let's do this listener question. You can email us thistimepod@gmail.com, and Spotify comments work. You can also text me if you have my number like this listener did. Question is, continue to enjoy the podcast. I haven't heard you guys cover the option of gifting the max of $38,000 per year from parents to children tax-free. This creates a future nest egg if started earlier versus later. Basically, how would you help them save with a bigger purchase like a home? Of course, this is predicated on both parents being willing and able to share the wealth. So we've talked a lot about the, basically his point, we've talked a lot about the great wealth transfer. We have not talked about the mechanics of actually gift giving, especially for something like a first-time home purchase. What if I help my kids save for that earlier in their life versus later? Thought it was a good question.
Okay.
What? You don't like this question? You want me to text him? He's asking about the gift tax exclusion.
Yeah, but the gift tax exclusion doesn't really matter nearly as much as people give it credit for.
Because the $15 million.
Unless you are a person who has a $30 million estate tax problem. Like if you're a family that's got $30 million between matriarch and patriarch, and you are in danger of having to pay for being above that when you pass away, then sure, let's keep really good records of all the gifts we give to the kids and do the $38,000 exclusion and file that away with the IRS. If you're anywhere below that and nowhere close, then who cares?
Yeah, there is terminology here, which is when you're above $38,000, you're in taxable gift range. You may think that means you pay 40% as a taxable gift. It just means you're clipping your coupon before you get to the $15 million.
Plus, you're allowed to multiply it by 5 and just front load 5 years worth of gift giving. So
that's for a 529, not for a down payment.
Still, like I'm eating into my annual, my lifetime gift giving exclusion, but who cares?
Don't misinformation me. I gotta test on this stuff in like 4 days.
I wish you the best.
The simple answer is you just give the kids the money when they need it, and count it against your $15 million. If you want to get really fancy and pay for stuff, you can do a crummy trust if you're worried about hitting that $15 million. Those are my two answers for that. Should I explain what a crummy trust is?
Let's do it. Let's go ahead and flex those brain muscles while you got it going.
Let's explain this. So there was a guy who went to war with the IRS and actually won. And so when you're giving a kid a gift and you want to use your $19,000 exclusion, $38,000 for a married couple who agrees to gift jointly. One exception to this is you can do a crummy trust, which means that you're essentially giving them a gift of future interest presently. And so the IRS doesn't like it when you give a gift of future interest. They say that you don't get the exclusion for that. And then this guy came along named Crummy, said, what if I give my kids the temporary option to just withdraw the money over a 30-day period? And so I can put it into this trust. They get a letter saying you can withdraw this money right now, or you can wait. Until you follow the terms of the trust. So if you want to not use your exclusion, you set up a crummy trust. You say one of the reasons you could invade a principal is in order to buy a new home. And then that's a way of doing it if you're worried about eating into your $15 million exclusion. That's the end of the answer. I don't have like fun banter on that. I just that a trust is money with instructions, and that's a potential way of doing it.
What I would be curious about is how many parents are actually taking heed of these gift tax requirements, disclosure requirements, when they give their kid a gift to buy a house. Like if I am 60, my kid's in their 20s or 30s, and they're looking to buy a house, I'm probably decades away from where I'm likely going to pass away. I give my kid $100,000 as a down payment to buy their house. Am I actually tracking that toward the exclusion? Am I even thinking to have a conversation with my accountant or TurboTax about that gift?
Yeah. It's a good question. Or are these rules that other people don't know about? That's a good point. We can end it there. You can find me. LinkedIn is a good place to do it. That's where we get some action on the show. Ricky Mulvey on LinkedIn. You can find Malcolm in the same place, or at Malcolm on Money on social media platforms. Thanks. We'll see you next week.
Information shared in this recording and by its guests represent the views and opinions of the guests and does not represent the views or opinions of the host. This content has been made available for informational and educational purposes only. This content is not, nor is it intended to be, a substitute for professional financial advice. It is always recommended that you seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your personal financial situation.